And I think the investors who participated on this IPO, they did add yesterday into their positions.
You're saying the institutions
Somebody sold.
Well, about 41 million shares traded yesterday. Somebody was on the other side of that trade.
So what do you think happened here? There have been some people, including Tom Farley, who used to run the New York Stock Exchange, who called this the perfect IPO.
Yep, I saw his segment yesterday. And, the pricing, like he spoke about, it's more of an art and a science. You wish you could just take the indications of interest and dump them into an Excel model, and it spits out that $72 price. Lyft's initial range was 62 to 68. So in that ballpark is where a lot of the demand lied and might still be the sweet spot.
And when you hear, we also had Keith Meister on the show. I don't know if you saw him.
I did not.
On the program. And he said that he's a hedge fund manager, a very successful one. We call him a titan of hedge funds. He said he sold on the open. So there were investors who were allocated shares on day one who literally turned around and sold.
Right.
I can understand. I hate to talk about I hate to say this. J.P. Morgan's one of the underwriters. I imagine that Keith does a lot of business with the J.P.
And Credit
Morgan.
Suisse. Credit Suisse did a great job on that trade as well.
And so they're giving a lot of business probably to certain funds that do a lot of trading with them.
Yep.
But if you're Lyft, or if you're actually the company, and you see people selling on day one, what?
Well, there's a real number of every IPO that's ever come public where that's happened. I mean, there's a number you could come up with.
I'll tell you how.
And at the same time, you want a little bit of sale. You don't want nobody selling.
You have to have liquidity, and I think they got up to 6-7 million shares before they launched it. What I'm looking at though is that pricing when it got to 20, 30 times oversubscribed, and you got to speak with management. You saw a lot of the excitement around this new transportation as a service and this sector coming. What I'm looking at is, let's not forget also the government was shut down in the first quarter. So you have all this pent-up demand that helped drive that valuation higher for Lyft.
Okay.
What does the government shutdown have to do with any of that?
So the SEC helps with the registration statements. So, for example, last quarter...
So you just think because the IPO market was shut for the first 2 months of the year?
Absolutely. The IPO market, you couldn't take an investor like a Lyft or an Uber or other tech companies are going to file and meet each other in the capital markets when you couldn't get your registration statement through the SEC.
Okay, but
I wouldn't have wanted to if you looked at what the markets did in December. That would have been horrible timing to bring something.
Absolutely, and one of the things that we look at when issuing an initial public offering is the volatility index. You have to have that sweet spot. One of the handles between 10 and 15 is a really good indication of a good conditions. Right. When there's an inverse relationship between the volatility index and deal flow. So as the VIX spikes, deal flow goes down.
So just speak to this. So there are investors who on Friday said to themselves, I want to get in on this. I want to bet on Lyft. I want to bet on ride sharing.
Sure.
They bought in the 80s. I don't know what a price. They're now looking at this saying to themselves, I'm underwater. You're saying hold. And what is going to be the tipping point at which you think the stock moves back? I know we're only a couple days out, so this is all very early.
Exactly. Let's just all take a deep breath, a big chill pill. But how can you spend 2 weeks on a roadshow, get intimate with management like you did, and then exit their stock on the first day or the second day of trading? You have to give them a chance to at least come out with their filings, with their earnings, with their numbers, to reinforce the thesis that you just invested in.
So tell us, though, what you're looking for and what investors should be looking for come first quarter, the first time that they're actually going to disclose their next earnings report.
Correct.
What do you need to see for the stock to move?
You're looking for what they spoke to and reinforced their vision was and how they're going to build their company over the next 2 to 5 years.
That's not going to be something you know tomorrow, next week, or next month. This is going to be what anyone who bought has some idea why they're buying Lyft for whatever to get in ride sharing. That's going to have to suffice for the near term.
But your investor base, and then you do all this work, and then you're like, I'm out. Well, I mean, how do you make a decision like that? How are you in this business?
But that's what I mean.
In this profession?
Were the people who were buying at the open, were they making decisions based on that? That's what. Was this a case of a hype that sucked in retail investors who maybe didn't do the homework or not? That's what I wonder.
And you have those who actually participated in the IPO to get that 72 share price, and then those who bought in after trading.
You can't fault anyone that sold at 87. That's exactly what you should have done. And anyone that was excited about getting it at 72, you could have got, I mean, this is all based on hindsight now, but I'm glad, you know, I was a stockbroker. I would have killed for 100 shares to give to my best client of Lyft.
Right.
And this is what happens. And I mean, you could buy all you want today at $5 below the IPO price. That's not a
This goes back to what Warren Buffett told Becky, right?
Well, yeah. And that was interesting comments to me. But indirectly, people own companies when you have your series of investors.
Right.
People own these companies indirectly.
But you think, let's just play this out. 12
Sure.
months from now, 24 months from now. Let's play this and put it in the sort of former Facebook camp.
Sure.
This stock is worth what in your mind?
It's hard for me to put a target price on individual stocks. What I look at is the overall
But then why would you want
market.
to own it if you have you just think it's going to be higher broadly?
Well, what I'm looking at, and Becky, back to, that doesn't make any sense to me. The government being shut down, and we only printed 18 IPOs in the first quarter versus 54 in the first quarter of last
But now you're talking
year.
about a capital flows story. You're not
Exactly.
talking about a Lyft-specific operations. I'm betting on this company story. So which is it?
Right. Well, I am not an institutional investor.
Right.
So I don't make those bets in the future. What we do is we issue IPOs to the
Right.
public. We take that company from private to public. And I think all things considered, this still was an extremely successful transaction.
John, I should know the answer to this before I ask it.
Sure.
But do you own shares of Lyft?
I do not.
Okay.
I do not.
But specifically, what metrics? I mean, I think this goes to the larger story. Is it a profitability issue you think that investors are going to ultimately bet on, or at least, I'm going to say ultimately, even in the next 12, 24 months? Is it looking to see the incentives, marketing costs come down? Is it to see the revenue just ramp wildly?
Again, you're asking me to make a decision on a target price and something that I actually don't
It's a story
participate in as
It's
an
a story
investor.
stock, but
You're talking buy side versus sell side.
Yeah.
I'm on the sell side, and I help these issuers go from private to public.
Right, but
what I'm telling you
during
is
that process of a roadshow, there's
Sure.
conversations I have to understand and imagine with the buy side, trying to understand what they're thinking in terms of valuation. This is a company that had a $15 billion valuation in the private markets at the last round, and then jumped effectively close to $10 billion because the public market decided to value it in a higher way, right?
Sure.
So the question is, what happened between $15 and $25 billion? And what were the metrics that those investors were looking at that were different than the metrics that the private investors were looking at?
And that's what deployment of capital, and that's what I was trying to explain earlier, was in the first quarter, because the government was shut down,
Right.
that deal flow was not put to work.
People were craving IPOs. Now they've gotten one. That cured me of my craving.
Okay, so let's flip this. Yes, let's flip this
Thank you, sir.
conversation
May I have
around.
another? Give me another one.
Your Slack.
No, thank you.
Your Slack, which is going to go public on the New York Stock Exchange, though they're
It's-
going
that's
to do it
gonna-
in a different way.
That's going to be a direct listing.
Direct listing. You've got Uber coming.
Uber's coming.
You've got Pinterest. We can go down the list.
Just keep going.
The lesson
Peloton,
from
keep
this
going.
experience is what?
Beyond Meats.
Excuse me?
Beyond Meats, we have a lot of IPOs in the pipeline.
No, but the lesson though from this experience of this Lyft IPO, if you're the CEO, CFO, or underwriter of these upcoming IPOs, the lesson here in terms of what's happened is what?
Again, that art and science of finding your initial deal price at pricing is the lesson learned. Make sure you double check and have
Do you
a
think
good
this should have
pricing.
been a lower price? Started at a lower price?
I think, again, based on the conditions, and when you start to get into 20, 30 times oversubscribed,
Right.
those issuers, the bankers at JP Morgan, Credit Suisse, Jefferies, they did a phenomenal job pricing this thing.
I have heard, and let me just leave you with this. I have heard some critique, and this may be a critique of the underwriters, maybe a critique of the NASDAQ, in terms of building that book, that they should have waited an additional hour. Had they actually waited it out a little bit longer before the opening price,
Sure.
that they might have actually started at a lower price, not a higher price.
I mean, I don't know if you're a sports fan, but this sounds very similar to a Monday morning quarterback.
Yep.
So you just
No,
looking
I
at
recognize that.
Friday's pricing,
Yep.
and they should have done this. They should have went over here. All things considered, in the aggression and the oversubscription of this transaction, this was an excellent deal.